Great.
Um, right. Um, Thank you, Rosie. And thank you, Kath. And thanks to Community Energy Scotland for hosting us this morning. And thanks to all of you for tuning in. Um, so Ben and I are going to go through what Ethex does, what Ethex has achieved, and what Ethex can do for you over the next 25 minutes, and we would be really happy to answer any questions that you may have after that. Um, so Ben, if you could go to the next page.
Absolutely. Let's see if I can make this work. Oops. There
Yeah,
we go.
by way of introduction, um, I joined FX a few years ago, having spent over 30 years working for a conventional fund management firm, JP Morgan Asset Management, where we were sort of playing around with ESG, but in an unsatisfactory way. I came to FX because it's a positive investment platform and we can lead investors directly to clearly articulated and defined impact investment opportunities. And I see a great future there. Ben, what's your name? Where do you come from?
Thanks, Joey. Hi everyone. So I'm Ben. My background is similar to all of you. So I worked in community energy for a little while. I used to work for a solar installer called Joju Solar, and I looked after one of their major clients, which is Energy for All. So they do a lot of stuff up in Scotland as well. They do a lot of wind projects. I looked after a lot of solar projects in England. I then went to work for one of my clients, another one of my clients, which is Energize South, who are a community energy group. So I was developing projects much like you for them. And I've come to Ethex relatively recently in the last few months or so. And just to repeat what Jerona said, it's fantastic to be able to have such an impact with you all. I sometimes say I'm a wolf in sheep's clothing because I feel like I'm representing you most of all when I'm speaking with you all. So it's a pleasure to be here and present this to you as well.
Ben joined us 3 or 4 months ago, and it makes a real difference to work with someone who actually knows their onions. Anyway, could we have the next page, please?
Absolutely.
Um, so just a little bit on FX. It was founded just over 10 years ago by Lisa Ashford, who is still our colleague and our boss. Um, and over that period, FX has raised around 120 million pounds for numerous community-led projects. Around 100 of that has been in community energy. Sorry, about 80 of that, and that's been about 100 projects. Um, and I must say, they've virtually all been south of the border. Hang on, I'm going to prevent my dog from coming in. And we're obviously very, very eager to raise that profile in Scotland. And again, we appreciate the opportunity to discuss what we have to offer. Um, so beyond simply providing a crowdfunding platform, we can offer strategic advice on finance raising and to create attractive investment opportunities for our investors. Um, Could we have the next page, please? So the way it works is that on our database, we'll have 20 to 25,000 um, investors um, who have who've got a track record in supporting community energy projects. And what we would do with you, with your projects, is to unpack is a bit of a modern word, your story to this big audience, um, as well as other potential investors that we can we can identify. Um, so what's the checklist? And Ben will go into this in greater depth. You know, when we speak with our investors, which we do frequently, their primary focus is impact. So we will work with you on the identification, the articulation, and the quantification of impact. And for community energy, the metrics are quite standard, they're quite uniform, it's quite homogeneous, it's relatively easy. When we get into other areas where we are involved, like affordable finance or CDFIs, it becomes harder. But impact for you guys is a relatively easy subject to embrace. Um, what do you want to achieve? What do you want to build? Where do you want to build it? Um, how long will it take? All that kind of stuff. We would discuss with each other who will benefit. Um, will there be a community benefit scheme that profits from the earnings that your project could generate? I think that's a really important aspect of what we do. We've worked out that over the lifetime of the projects that we have funded, there's an estimated £80 million that's going into community benefit. Um, is it sustainable? Is it replicable? Um, who are we talking to? So for us, what's really important is accessing opportunities for co-investment or matched investment. And we'll go into that a little bit more when we get to the examples later on. And then we spoke about impact, but there's three things that our investors are after. First and foremost, impact. Secondly, preservation of capital. They don't want to lose their money, and they would like to have a reasonable return. So to what extent can you provide investors with a reasonable return? And by reasonable, it's sort of bank account plus a little bit. So that's just there's lots of questions there potentially, but why doesn't Ben go into some other aspects on the next page?
Thanks, Ray. Let me just move a few things around. Yeah, so Jerome kind of very well explained the background. So bearing that all that in mind, how are we able to get you listed on the platform? So we have a few criteria. One of the key things is we're not necessarily looking for smaller projects. So in the past, when I've been developing community energy projects, we're looking at anything from around 20 kilowatts to start a PPA upwards. For Ethex, we're probably looking for something around 150,000 as the base minimum. Um, so you're probably looking at around 150 kilowatt, 200 kilowatt projects to start off with. Certainly when it comes to solar, wind might be a little bit different. And we can go all the way up to, beyond a megawatt size installation. So essentially, the takeaway from that is the bigger, the better. We do have fees. Some of them are fixed fees. So it's better for you as a community energy organization to go for a bigger project. And we can maybe talk about introducing a portfolio of jobs as well. So you don't necessarily need to have one big project. We could look at aggregating and see how that works for you as well. Um, so obviously, if you're listing on a platform and you're trying to attract capital from investors outside your kind of very specific area. So Jerome mentioned that we have over 25,000 investors. We want to make sure that we reduce the risk for them as much as possible. Just as if you were investing in a project, you would want to make sure that you're not going to lose um, any of your money. So we have checks in place. We go through a due diligence process. So we will look at your finances and your income statement and balance sheet. just to make sure everything is kind of above par. We'll look at things like your governance structure. So, who is in your team? Have they had a lot of experience of community energy? How can they contribute to the project, which again reduces the risk. So, we always want to make sure that whoever is investing in the project is not exposed to undue risk. So that's really important. So your team is one of the foundational building blocks of your project. So we want to make sure um, that everything is right in that respect. Um, so this slide is just building a little bit on what I've just said. So how would you launch an offer on Ethex? So number one, so getting your organization investment ready. So a couple of things to note here. Most of you, I think, are probably looking to raise community shares for your funding. That's certainly my experience. Whenever I've worked with community energy projects, we've always talked about share raises, community share raises. Um, FX also do another product, so bonds. So we can look at community bonds. So not just share raises, but a debt instrument. So uh, we'll probably touch on this a little bit later on as well, but we have something called an innovative finance ISA, which is your regular ISA, but it allows investors to invest their community bond through the innovative finance ISA, which creates tax savings. So we also have that product for you as well, which we can talk about in the Q&A as well. Number two, developing your offer. So when you list on the platform, you will prepare an offer document. So this is essentially as it sounds. So the investors need to know what they're investing in. So we will work with you to help list your finances, the project, and also make it marketable. So when investors are looking at your project on the platform, um, we will make the project as attractive as possible to help you gain the investment. This has always been tricky. Again, just going back to my own community energy experience, um, marketing is tricky because you have that core base of people that are interested in your project already and that are working with you. The question is, how do you reach out outside of your circle to find the extra investment? So we can help you do that through the offer document. And by creating an engaging campaign as well. We have a marketing team who will help with the PR campaign, press releases. They can contact local newspapers and journalists as well. Um, and then it's about launching and engaging investors. So it doesn't really stop when you launch. Um, you want to keep gaining that traction whilst the project is live. So we would encourage you to keep reaching out to potential investors and keep building that network all the way through. And then finally, obviously, when you've reached your target amount, after we'll probably allocate a certain number of days for the project to be live on our platform. Once you've reached your target, we'll close it and you can put your funds to work. Okay, let me just move a few things. Okay, great. So, why would you choose Ethex? The key thing here is when you're a new community energy group, and again, this is just from my experience, when you're a new community energy group, or you haven't done a whole lot of raises before, it can be quite hard to raise the finance. So a lot of us are volunteers. I'm a volunteer for my community energy group. We don't have a lot of time either. We probably all have day jobs and other commitments. So it's hard to get something as tricky as a share raise done quickly and to the target amount. So this is where FX is really handy because we already have 25,000 investors on our books, registered on our books, as Jerome said. So it makes it a whole lot easier. And we've been doing it for a little while. So Jerome, I think we've been doing it since 2013, 2012, 2013, something like that. So we've done a fair few of these. We've done about 80, I think, Jermaine, did you say?
Uh, yeah, community energy raising about
Yes,
100.
community energy. Yes, about 100. Thank you. So we've done a fair few of them. So we have a track record. We know what we're doing in this area. And we, as I said previously, we have the marketing expertise in place, which is really, really important. That's one of the key things that we're able to offer and support you with to get that share raise. Okay, over to you, Jerome.
Just let's just focus on your final bullet,
Oh yes,
Ben.
yeah, yeah.
So I think what's really important and what I really feel, um, certainly in contrast to where I used to work, is we talk about this commitment of the team. FX, there's no more than 15 of us. It's a very small, focused um, team. We are not for profit. We have just received new and fresh funding from the likes of Joseph Rowntree, Better Society Capital, Esme Fairburn, Friends Provident. So we've got a really exciting runway over the next couple of years. Um, so I just wanted to say it. So when we talk about fees, they are, obviously we have to charge them, but this is all in the context of an organization which is not for profit.
Mm, very good point, Jerome. Thank you.
So on the next page, we just thought we'd provide you with a few examples. Um, so Grimsby Community Energy is something that was launched. It's run by the very impressive Vicky Dunn. We launched this in December of last year. We were aiming to raise 227,000, which is a very precise number, £1,000 via a community share offer, which was yielding an interest rate of 6%. We that offer, because as soon as it crossed 160, it attracted booster funding from the Cooperatives UK program of £80,000, and the net result was that we ended up with 382,000, with further raises expected in the Grimsby area. So this is a really, really typical FX case study. You can see all the details at the top. It's really good because today we actually launched something very similar to this, and something very similar in scale, in size, in the form of Energize South Downs. And if you go to the Ethex website, um, you can see the details of that. So if we go on to the next slide, please. Um, we're obviously very eager to highlight anything we've done in Scotland. And I mentioned earlier on that we have yet to do a community energy project, although we are speaking to a few people. The projects that we have done in Scotland are Glengarry Forest cabins that we completed in 2022. Again, target raise was exceeded, so we raised 311,000. That was also a community share offer, and that was match funded. I forget who match funded it, but if we go to the next slide, Aerospace Kinross, that was 2023, matched small amount from the People's Postcode Lottery, and we raised 250,000 with an if ISA that Ben mentioned, a bond that yielded 5%. I should say that currently, in addition to a few community energy projects that are in initial stages of discussion, we are also talking to a UK-based community development financial institution, a CDFI, about funding a loan book which would be exclusively for Scotland. So look, we thought I'd give you a sprinkling of examples. We go to the next page, Ben. Um, Here is, if we really get into the guts of individual offers, here we can see what Grimsby looks like or looked like on our platform, on our website. So there's loads of information here. What I would highlight on the left there is a really catchy video which presented by Vicky and her colleagues discussing the history of her organization, the impact, the plans, the future, and comments around financial sustainability of that project. And you can see as an investor what you would need to do. You press login or you register, and you've got the targets, the opening date, the close date, and the sort of the bullet points right at the bottom. Your money will positive climate action, help communities, support local energy reduction initiatives, and earn a financial return. That is classic social investment, as far as I can tell. Um, and I think that takes us to the end of our presentation. But as I mentioned at the beginning, um, I believe that the best aspects of encounters and meetings like this comes out of the questions. So please don't hesitate, don't hold back. Um, Ask us any questions.
Thanks, everyone.
That's great. Thank you both. So as Rosie said, you can either put your virtual hand up or you can pop questions in the chat. I'm sure there must be some questions to ask Ben and Jerwin. So while people are having a think, aware of whether fees have been covered in the past by small grant funding.
That's a really interesting question. We've had and we have put numerous offers on our platform that have been accompanied by grant funding. I'm not sure if it was specifically highlighted that the grant would pay for the fees, but I've no doubt that that's occurred.
Okay. Very quickly, does the fee cover campaign costs?
Yeah. So there'll be an initial fee, which will cover the due diligence stage, and I guess campaign costs. And then there will be a success fee, which is paid at the close of the offer. So the campaign costs will be covered by that initial fee.
Okay, thank you. Rosie, do you want to pick up some of the questions we've got in the chat or see if
a question, who are your investors, where are they located, and how much money do they usually put in individually?
Will I take that, Ben?
Yeah, of course. Yeah.
This is a really interesting question because it's really hard to pin down. But let me just give you a little anecdote. There's a person that a colleague and I spoke to a few weeks ago, and she, I don't know, probably about my age, sort of late 50s, and she put in, I guess, £5,000 into a recent community energy project, and she had some questions around that, and just sort of engaging her, she had received an inheritance, and she was keen to put around 10% of that into direct impact investments. And I guess Ethex could be categorized as such. She was slightly disillusioned and slightly confused by standard ESG products that you get, JP Morgan Asset Management, BlackRock, because she couldn't locate it or be specific or receive specificity about what she was funding. So 10% was going to go into projects like ours. But, you know, we've had people who've put in £100,000. We get people putting in £100. And we like to see the latter because this is all about the democratization of finance, and it's the more the merrier, the embracing the community. So it's a very hard question to answer.
Thanks, John. It sounds as though it's a very varied investor audience,
Yeah.
essentially.
And that's good.
Yeah. Rosie.
Shall I continue in the chat? We've got a few more questions now. So does Ethex have an appetite for pre-consenting development finance?
That sounds like a Ben question.
Thanks, Jerome. I would need to clarify what pre-consenting would mean, Neil. Could you explain that? Maybe you can take yourself off mute as well if you like.
Yeah, thanks. Yeah, basically community groups dependent on public funding to a certain stage, but that gets difficult. And before you've got the consents in place.
Oh, I see what you mean.
Yeah, there's a couple of years worth of investing in EIAs and things like that.
Yeah, excellent question. Yes, I see what you mean. So development finance rather than construction finance. Yeah, so it's a very good question, Neil, and this is one of the big issues I think in community energy. It's always a lot easier to raise finance when you know you have a project that's just about to be built or has been built, rather than seeking kind of development funding. I, in fact, have this specific problem right now with the community energy group I volunteer with. We are trying to get a wind farm off the ground, no pun intended, on the south coast, onshore wind farm. The development costs, even before, as you said, Neil, pre-consenting stages, it's going to be about £1 million or £2 million, and as a community energy group, we don't have that. It's tricky to find that kind of finance, and also just to answer your question more specifically, it's trickier to raise that kind of finance from a normal retail investor base on Ethex, simply because the risk is greater. And when we're doing our due diligence, we might assess that we would not want our investors to take that kind of risk. So normally, most of our community energy projects are construction finance raises rather than development raises. Jerome, would you agree with that?
Yeah, I've got an example that cropped up yesterday, and it might not be 100% relevant to this, but we were asked by a community energy organization if we would put their project on the platform before the project was signed off by the relevant minister. And we came to the conclusion that we would rather wait until it was signed off and everything was sort of clear in a regulatory sense.
Okay, that's really useful. Neil, I hope that's helped to answer your question. But yeah, it looks as though we'd have to go elsewhere for the pre-construction work.
I would just add, Neil, thank you, Kat. I would just add, Neil, as well. You are not the only one thinking about this. We're all thinking about this, and it's a nut that we're going to have to crack in the next few years if we want to scale community energy. I know we're speaking again with my community energy organization hat on. We're speaking to a few funders to see how we could get that development finance, which is so crucial. I can get in contact with you after this call, Neil, and see if we can maybe put our heads together and see what kind of development finance we could get for community energy.
How does that sound, Neil? We can put you in touch with Ben if you want to afterwards.
Yeah, sounds good. Thanks. Okay.
Okay, we'll do that.
Thanks, Neil.
Thank you. Rosie, any
Yeah,
yeah,
we've got
please.
quite a few
Mhm.
few more questions to get through. So another one is, in what way are investors locked in, and can they take their money out at any point, or is there a minimum term?
But that depends. If the offer on the platform is a bond, then they will be 5, 6, or 7 years. And after that period, one would expect the capital to be repaid. During the interim period, there is little to no liquidity. So it's the interest rate, which would be paid perhaps annually, and then your capital back after 5, 6, or 7 years. Withdrawable shares is much longer. This could go on over 20 years. You would expect to receive an interest payment every year, but capital return not for a lot longer, which is why, in general, we would encourage a slightly higher rate of interest for withdrawable shares than for bonds. In terms of liquidity, inheritance, death, anything like that, then the organization may consent to perhaps between 5 and 10% a year where needs must, but otherwise liquidity is limited, and this is a very normal feature.
I would also add to Jeroen's very good points. It's inherently a decision for the community energy organization. So we will obviously work with you to help determine all those points. But it's something that you would have to, as an organization, come to a decision yourselves. And it's also at your discretion whether you're paying interest that year if you can afford to, and so on. So it's a joint decision that needs to be arrived at.
Thank you.
Thank you.
The next one was, is there a maximum amount that Ethex would consider?
Well, how long's a piece of string? But yes, there probably is a maximum amount in terms of appetite. I mean, look, a couple of years ago, we raised over 2 million for Energize Barnsley. But it was an attractive rate, it was a bond, it was if ISA, there was loads of co-investment, matched investment, and all of those features enhance the prospects of selling more. But in terms of, let's take Grimsby Community Energy, with those characteristics, impact characteristics, financial characteristics, we would probably encourage no more than 500,000 or 600,000. But that doesn't mean that a few months later you can come back and do it again. If you go to our website, it's obvious that Solar for Schools have been coming back again and again and again with offer sizes of 600,000 to 700,000. We've raised a total of 12 million for them over the last 7 years.
That's really interesting to hear, and it's great. Again, it's good to hear that the diversity of the amounts involved. Yeah, no, that's really good. Rosie, I think we might have a couple more questions.
Yeah, we've got a bit of a longer question now. I'll try and summarize it. So you mentioned that the rate of return was bank rate plus, but this was fairly broad. As banks like Triodos tend to pay a lower rate of return than some other banks. Is it possible to give a figure or range on bank rate plus, and are there ethical bank rates plus that you use?
Okay,
I don't know if the person asking might want to kind of clarify at all.
no, I get that. So in order to simplify that issue, we don't look at individual bank rates. We just look at what's called the 10-year government bond yield, which is currently 4.6%, because most banks will strike their rates off that benchmark. And what we will look for, what we've ascertained, is that anything that is less than 1% above that will start to struggle in a financial sense. So at the beginning, I said people want impact, people want capital preservation, but people want a fair financial return for the risk that they're taking. And in general, that fair financial return would be about 1% in excess of the 10-year government bond yield. So, yeah, and the brilliant example is Energize South Downs, which we've launched today. That's 5.5%, so it's around 1% greater, and it's withdrawable shares.
Thank you.
Excellent. Thank you. That clarifies that. Thank you.
Thanks for the question, Murda.
And I think just one more. So I think Dara's left now, but others might want to know anyway. How is the rate of return decided? Does it have much impact on how much can be raised? So if the projected rate is high, say around 6%, does that make it easier to raise a greater amount? And does a low projected rate mean it'll limit how much can be raised?
Well, this sorry, this ties into my previous answer. We've done a lot of work on this. We've obviously got a lot of data, and we can plot, fill ratios relative to premium above that government bond yield that I discussed. And there's a very positive correlation. So if you want to go for 8% for a community energy project, which stretches the finances somewhat, but it'll go off the shelves very, very quickly. If you go for 4%, that then becomes much, much more of a struggle. Unless you're confident that you've got a huge amount of local participation, unless you're confident that you get significant co-investment or matched investment. So I would encourage people to think about that 10-year gilt yield plus 1% as a kind of starting point.
Okay, I think that's really useful information. Thanks, Joan. Rosie, I don't think we've got any more questions in the chat, have we?
That's all the chat questions now.
Okay.